Welcome to the Tech Blog Writer Podcast, your guide to future tech trends and innovation in a language you understand. Now, over to your host, Neil Hughes.
Welcome back to the Tech Blog Writer Podcast. Now, a few weeks ago, I noticed that somebody called Nouriel Roubini, Bill Clinton's former senior economist, said that the decline in the value of Ethereum was actually expected due to its lack of active decentralized applications, claiming that 75% of decentralized applications are nothing more than crypto-kitties, scammy Ponzi schemes, and casino games. Controversial. Now, although Ethereum is still in its infancy, the question of scalability has plagued this popular protocol. For example, Ethereum is only able to process about 10 to 12 transactions per second on its mainnet, limiting the type of services that decentralized apps could provide. So with this in mind, I invited Daniel Peled onto the show today, and he's the co-founder of Orbs. And I want to discuss with him the conflicting views out there on whether Ethereum has a place in the mainstream adoption of decentralized apps. Now, Daniel believes that adopting Orbs alongside Ethereum will actually allow decentralized apps to enjoy the best of both chains. Unmatched security, liquidity and ecosystem integration, together with low fees, production-ready scalability and a suitable fee structure. Intrigued? I know I am. So buckle up and hold on tight as I beam your ears all the way to Tel Aviv in Israel so we can speak with Daniel from Orbs. So a massive warm welcome to the show, Daniel. Can you tell the listeners a little about who you are and what you do?
Sure. So thanks to you for having me on the show. My name is Daniel Peled. I'm one of the founders of a project named Orbs, which is an infrastructure solution that aims to scale base protocols such as Ethereum in order to enable large consumer applications to transition and use blockchain technology. I'm also the founder of Hexa Group, which is an investment and consulting arm that helps grow the ecosystem around Orbs and blockchain in general.
So my understanding of Orbs is that it's a public blockchain acting as a production layer to complement Ethereum. But just for anyone listening that are hearing about you guys for the first time, can you just set the scene a little and tell me more about what it is and what problems you solve?
Sure. So I think what could be interesting for the listeners is actually the journey that we've gone before starting the Orbs project. And I think that will give a good context to what we're doing and why we're doing it. So I got into the space in 2013 when I initially heard about Bitcoin. The price was hovering around $1,000. The media was talking about it. And obviously, when you see an asset class grow so quickly, it becomes very interesting. And I started to educate myself. The more you dive into the technology, I really think that a lot of people start to understand that this is one of the largest innovations that is happening in our generation. And we want to learn more and participate and be part of this ecosystem. Initially, for us, it was in the investment space. We bought the initial Bitcoins. The price was $1,000. At the beginning of 2014 came. The price collapsed. If you remember, almost 150, and it took almost 3 years to recover. But where we saw the opportunity was really around ICOs and token sales. It wasn't called that at the time, but that is essentially what started happening in the end of 2013. The initial token sale was a Mastercoin, and that aimed to build a second layer on top of Bitcoin. Vitalik, I remember, came to Israel to see if he can build that second layer on top of Mastercoin, on top of Bitcoin. Then he realized Bitcoin was not designed so much to have that second layer, and he went to start Ethereum, and we know how that developed. But that was very interesting from an investment perspective because two reasons. One, we saw a lot of innovation happening in this new project. For example, color coin, second layer, smart contract, decentralized storage. And from an investment perspective, the low market cap is very attractive. If you remember, Bitcoin at the time was around $10 billion. So let's say as an investor, you're trying to do 10x. A lot of money needs to flow in order to reach 100 billion market cap valuation. But investing in a token that started initial $1 million market cap or 10 million, to do that 10x is essentially faster in most cases. So we started to invest, I think, in all the large token sales from 2013 to 2018, Mastercoin, Counterparty, Ethereum, Golem, Gnosis, Basic Attention Economy. And that was very successful with the growth of the network and growth of some of these tokens. Each one of us also had his own startup. My brother Uriel, who is one of the co-founders of Orbs, had a startup. He raised money from Alibaba. After a couple of years, he sold it to Alibaba. Now it's their R&D in Israel. Tal, who is the technical co-founder, also had a startup, and he sold it to Wix.com. And I also had a startup in the fintech space where we got investment from MasterCard, Santander, and other financial institutions. But all this time, we were very much involved in the blockchain ecosystem, educating ourselves and also investing in interesting opportunities. And 2017 came, and then it's really where the whole market exploded regarding ICOs. There's a very nice video that shows the growth in the amount of ICOs and also the amount raised in these ICOs throughout the last 5 years. And you see it pretty dormant in 2013, 14, 15, 16. Aggregated funds raised was around $300 million, and half of that is the DAO that was hacked, as we remember. But since April 2017 until the end of the year, additional $6 billion were raised, and the amount of ICOs is crazy. Instead of 4 months, suddenly there's about 100 a week. And to be honest, we are quite cynical regarding a lot of the different token sales. We think a lot of these projects will disappear. We think that a lot of them don't have real fundamental value. And also they are not good investment opportunities. And this actually has been proven in CoinMarketCap. If you look at the screenshot year over year, the top 50, top 100 projects are being replaced by new projects, more mature projects, except some of the infrastructures that are obviously growing with the network effect and the ecosystem around them. So in 2017, we made a decision to stop investing, in small teams, white paper, a lot of people selling, future dream, but very little accountability. And we said, if we can actually approach real companies that have users today, that have governance, that have track record, revenue, and we can help them transition into the blockchain ecosystem, that will mature the ecosystem, and that will also be a very good investment opportunity. And this is where we started Hexa Labs. Hexa Labs is a consulting arm and also an accelerator that helps accelerate the transition or to do a tokenization process in a regulated and responsible manner. So over the year of 2017, we helped some of the largest companies that enter the blockchain space to do this transition. If it's to help them with the token economics, with the smart contract, with the security, with the understanding of the investors community and so on. And that has been very successful. I think both of these companies that have done the transition and also from the investment perspective. But what it also highlighted to us is that these companies, once they finish their token sale and they issue the token on top of Ethereum, and they actually want to transition their large ecosystem, which they have today, and they really reach a wall. If it's from transaction throughput, Ethereum is about 7 a second. If it's the fee that is not scalable, if it's issues such as compliance and regulation, these are very big companies. They have something to lose, so they need to be very careful and knowledgeable regarding that vertical. If it's the whole ability to upgrade and do updates to the technology, that is very hard. If you think that all the political ownership is in the hand of miners, that it's very hard to push updates and to influence that. And this is where we started analyzing what are the really third generation blockchain trying to solve a lot of these productivity issues, so we can recommend the customers we're working with to really put their eggs in something we believe has a bright future. And as we know, there's several very good teams working on solving these issues. And we looked at Algorand and Graphene and Tezos and EOS and Stellar and Ripple and the solutions out there. And what you really realize is that there's not going to be one blockchain to rule them all because it's a lot of matter of trade-offs. Do you want to create a blockchain infrastructure that is very secure and decentralized, or for example, Ethereum and Bitcoin, or do you want to have a more centralized system that has much fewer nodes, such as Stellar, Ripple, EOS, Hashgraph, but is much faster from a transaction throughput perspective? Do you want to create a system that is much more anonymous, for example, Monero, or something that is much more compliant, for example, Ripple? And it all depends who is the customer you're building for. And we had these large consumer applications such as Kik with 17 million users, or IronSource that has an SDK with over 1 billion users around the world. And we started to understand much more clearly their issues and their problems. And we got to the realization that we need to design an infrastructure that can really cater to their problems and solve real issues. And this is how Orbs started. And I think that journey gave us a lot of insight because from day one, we had real customers with real problems, and we were working in a very requirement-driven nature and approach.
I'm so glad you said that, because there is, I think, over 2,000 different projects on coinmarket.com now. And like you said, many of them are just selling future dreams and there's no real substance behind them. So I've got to ask, though, with what you're doing here and all the businesses that you're helping and the problems that you're solving, what is the role of the Orbs token? How does that fit into everything?
So the way we see it is that we think that over the last almost 10 years now, Bitcoin, and over almost the last 5 years, Ethereum, what has been established is the L1 network, which is a very decentralized layer and very liquid layer. If you think about the amount of miners participating in proof of work in Bitcoin or Ethereum, these are very resilient systems. And they're also very liquid. If we look at the daily trading volume, it's in the billions of dollars daily for Bitcoin and Ethereum. But obviously, as I mentioned before, these infrastructure can't at the same time solve the issues that large dApps and consumer applications are facing when they are transitioning into this space. And from a productivity perspective, if it's update and fees and transaction throughput and other things that we can discuss. So what we are solving is really the productivity layer. And this is why Orbs was designed from day one to be a hybrid solution. We want to give applications that are building on top of Ethereum the best of the two worlds, the liquidity security that Ethereum provides, but also the productivity layer that the Helix consensus algorithm that was designed from the ground up and that Orbs provide. And the thought process that we took is actually looking at AWS. A lot of people, look at the competition between the different infrastructure and blockchain solutions. But we think that the competition is less between the existing blockchain projects, but more with a much more centralized system, which is AWS, because this is today the system most application and consumer companies are using. And AWS is an amazing solution if you look about fees and scale and the ability to update and the flexibility. And when you start to analyze how does AWS architecture look like, you see there is two systems. One is a very fast system for accounting. AWS gives you, Amazon Cloud Services, two main values, which one of them is storage, and the other one is trade CPU power, which is very similar to what blockchains provide applications, which is storage. A blockchain is an immutable ledger, and also a smart contract, which is computational power. But AWS does the settlement with actually a very old and even stupid system, and not very efficient, which is the US dollar. And that works very well because instead of paying for every API call for storage or CPU, you actually do one monthly payment settlement that creates a lot of predictability for the applications regarding how much they're going to pay. So Orbs hybrid blockchain is designed in the same manner that we have Helix consensus algorithm for the accounting of the storage and smart contracts, but we actually do the settlement, which is once a month using a ERC20 token on top of Ethereum.
So if we do have any business leaders listening that have got that huge following and everything in place and they want to explore this space, can you offer a use case that will enable the listeners to visualize a before and after picture of the old way of doing things and the new way of doing things, and how your solution is a big game changer in all this?
Sure. So I think a great example is crypto-kitties. That was launched, I think, around December 2017. It started the whole kitties craze that essentially broke the Ethereum network. The network reached the maximum transaction per second. Transaction costs grew dramatically. Transaction confirmation time took a couple of minutes instead of a couple of seconds. And really, the whole usability was completely ruined. As we know, if there's one thing that really kills consumer application is friction. and the waiting times and the fee really made crypto-kitties almost unusable when it was at its peak. Now, they excited down a bit, and actually there is about only 500 daily active users. But at the peak, even an application such as crypto-kitties really reached the maximum of Ethereum, and Ethereum is the second largest blockchain in the ecosystem. Value today at $30 billion and above, which just shows you how much immature the space is and how much more room there is for innovation in order to really be able to give solutions to large consumer applications. So on top of Orbs, all the issues that crypto-kitties was facing would essentially be solved. They would still have the security, liquidity, and the integration that the Ethereum ecosystem has to offer. And I think that's huge value. And this is one of the reasons ERC20 really became a standard of how you transfer value over the internet, because of that security and liquidity and integration to all the different exchanges. But using the Orbs consensus algorithm, things such as transaction throughput that can scale to tens of thousands and speed that is very minimal is something that we can provide today. And I think that, as I mentioned, crypto-kitties is just an example. But what we're experiencing is really that feedback loop between blockchain infrastructure and applications that each time they improve each other. So, when CryptoKitty came, a lot of problems really surfaced and became very clear to many developers and many projects working on this ecosystem. And now there is a solution such as Orbs that is looking to solve these big issues. But it's not to have a game necessarily such as CryptoKitties, but it's really to be able to endorse the next wave of applications. And I think that feedback loop between the apps and the blockchain infrastructure is very important to act as a guidance to make sure that we're really solving real issues for real users. So one of the companies and projects that I'm very excited about, and the collaboration was announced a couple of weeks ago, is with Terra. Terra is a stablecoin solution. I think stablecoin is one of the most important verticals that are needed in order to grow the ecosystem and to push for adoption. As we know, I think the killer feature for cryptocurrency is really payment and transfer value. But the issue that Bitcoin is facing today, and also Ethereum, is that there is a lot of volatility. So even though a lot of merchants accept Ethereum and Bitcoin, essentially they're just taking the Bitcoin and straight away diversifying it into fiat, and actually value goes out of the ecosystem and doesn't stay within the ecosystem. So stablecoins aim to solve that, to have all the advantages of blockchain technology, the global peer-to-peer payment system with very low fees, but also the stability of fiat currencies. And if you look at the background of the founder, which is Daniel, he created Timon. Timon is one of the 3 largest e-commerce websites in Korea. And they have 20% of the population using Timon. They're driving more than $4 billion worth of transactions annually. They have more than 10 million users. And he created a Terra Alliance that includes other large e-commerce in Asia to adopt a Terra protocol and stablecoin solution. So out of the gate, when they go live, they're aiming to have 40 million users transact with their currency and to process more than $25 billion worth of transactions. This is 3 levels of magnitude more than the issues that CryptoKitties was facing. And working together with them and seeing that how Orbs can really cater for these problems of fees, scalability, updates, the whole virtual chain concept that Orbs is pioneering, that gives you much more flexibility. I think we are only be able to do that by working very close with some applications that are really building the next wave of dApps in the blockchain space.
I'm glad you mentioned stablecoins there, because I completely agree with you, and it is incredibly important for them because they play such an important role. But What do you think about the current problems that Tether are experiencing at the moment? There's a bit of an increasing concern there, isn't there, that Tether itself will be replaced by new stable coins, better for crypto in the future. Do you have any opinion on that, or have you read anything about this?
Yeah, I think Tether, there is a reason why it got so much adoption, because there's real friction today between the on-ramps and off-ramps, between cryptocurrencies and the traditional banking system, mainly KYC and AML. You know, the bank knows the customers. It's very easy for the bank to do KYC, but to do AML, anti-money laundering, with the anonymous nature of Ethereum and Bitcoin, it's very hard for their compliance. So actually, even if you sell cryptocurrencies via the big OTCs, such as Circle or Cumberland or Kraken, and to get the wire transaction to be accepted by many major banks in different countries is very hard. So a lot of the people, in order to hedge, they go into Tether, because basically this is the solution there is today within the exchanges. But as you mentioned, I have great fear that Tether is so popular today because we know there is a potential accounting and legal issues behind the organization, and essentially Tether is a completely centralized coin. So, you know, OKEX holding $4 million worth of Tether on behalf of their users, without Tether, the company actually issuing an accounting balance that shows where the money is sitting, if there is really a one-to-one peg between the Tether and the fiat money. I think this can lead to a disastrous result. And Terra tries to solve the issue of a stablecoin, but without a centralized factor of just trusting one entity, as in the case of Tether. So I think Tether showed that there is real demand for stablecoins, because of the issue to hedge against the volatility, and because of the difficulties on the on-ramps and off-ramps between cryptocurrencies and the traditional fiat industry. But I think also there's a lot of room for innovation and upgrade regarding stability coins, and it's created a whole ecosystem. If you look at Basis, Terra, Saga, and some of the other amazing projects looking to innovate and solve this important vertical.
Definitely. Now, when I was researching you guys, I also recently read that you said that the decline in the value of Ethereum was expected due to its lack of active decentralized applications, and that 75% of decentralized applications at the moment are crypto-kitties, scammy Ponzi, pyramid schemes, and casino games. I mean, can you expand a little about your observations in that space and what you meant?
So I think there is a couple of factors into play there. Obviously, there is the fact that we know that Bitcoin market as a whole has gone through multiple waves. And what we experienced in 2017 was obviously a bubble with a lot of retail consumers coming on board, and the media facilitating a lot of the hype. And then there is a correction in the price. This happened 6 years. And because Bitcoin is the leading currency, as acting as the gateway to fiat currency, obviously it's affecting the other tokens, Ethereum included. I think people analyze this, and there is about 85% correlation between the rise and decline of Bitcoin and Ethereum and all the thousands of other cryptocurrencies. So obviously Bitcoin is leading the way. And that being said, you know, when you're trying to break out of that pegging to Bitcoin, it really needs to depend on the own merit of that cryptocurrency. And I think Ethereum has done amazing things over the last 5 years. If you look at the growth and the value creation from 30 cents in 2014 in June to $1,400 in January 2018, that is incredible. 4,200x in about 5 years, even less. If you take Facebook, for example, in 6.5 years, they're down about 4.55x growth. And the whole ability to create new kind of companies or ecosystems such as Bitcoin and Ethereum, if you think about it, it's a non-profit foundation, never signed a legal agreement, that today has more than 30,000 developers, more GitHub repositories than PayPal. It's a really new kind of entities that are being created. But as I mentioned, one blockchain can't be the solution to everything. So today, most of the dApps on top of Ethereum are very immature, because Ethereum doesn't have the ability, and Vitalik says that in a very transparent way, to solve the issues that they're facing. Obviously, they are trying to work on this solution with sharding, with plasma, and so on, but this will take time, and because of the complexities to upgrade, and working with the proof of work and multiple miners globally. And if you check state of the dApps, there's more than 2,000, 3,000 dApps on top of Ethereum, but the actual usage, transaction throughput is very, very low. So even though fees are paid on the system, which does give inherent value to Ethereum, just if you look from a fee perspective, there's still a lot of growth, real growth to be made. And over 2017, it was mostly retail craze and a lot of media hype that drove the value creation. And now 2019, after the correction in 2018, I think will be much more focused on real usability, real transaction, real adoption of application and merchant driving value and real economical model.
So if we look towards the future, can you also tell me a little bit more about your belief that adopting Orbs alongside Ethereum will actually enable apps to enjoy the best of both chains, unmatched security, liquidity and ecosystem integration, together with low fees, production, ready scalability and suitable fee structure? Because it sounds an incredibly exciting and incredibly different future, isn't it?
Definitely. I think what we've seen over the last year or two is that there's a lot of focus on the infrastructure layer. And I think that is understandable because there's still a lot of things to solve and it's very immature. The history until today proven to us that the infrastructure has been the largest and fastest growing ecosystem because they create the network effect. There's very few teams that are able to deal with decentralization and security. Most teams will focus on, the utility aspect if there is a founder that understands the music industry or the gaming industry or the gambling industry and so on, but very few teams with a tech and research capability to tackle the infrastructure issues. So all the network effect of the tokens building on top of that infrastructure goes down to the native token. So there is a lot of excitement in the infrastructure space and a lot of smart teams. But there's also a tendency, I think, to reinvent the wheel where it's not necessarily needed. As I mentioned, Ethereum has done a tremendous and given tremendous value to the ecosystem by establishing the L1 network. It's integrated to all the exchanges. It's very liquid. It's very decentralized. It's very secure. I think ERC20 is really a new standard of how you transfer value over the internet, which is attracting some of the largest companies in the world. If a couple of years ago, we just had white paper and ideas, and then in 2017, some established companies started transitioning, but not necessarily the best companies. Usually it was the ones that couldn't continue raising venture capital and weren't necessarily the leaders in the space. Today, what we're seeing are the best companies transitioning because they understand that programming the economy and the incentive systems within their ecosystem is something that is very powerful and will give them additional advantage over their competition. So we see Telegram transitioning, Kakao transitioning, Line transitioning, Facebook transition, David Marcus to lead the blockchain initiative. And that is very, very exciting. But again, I don't think that it necessarily means that we need to start from scratch. I much more believe that applications would use multiple blockchain layers to solve different problems that they're facing. And this is exactly the approach Orbs has taken, that we will be able to utilize the best of Ethereum, the security, the decentralization, the liquidity. But on top of that, give application and ERC20 tokens the ability to scale and really be able to transition their ecosystem today with solving some of the issues that you mentioned, such as faster confirmation time, higher transaction throughput, a suitable fee structure that can scale. If I just give the example of fees, I think it's very interesting because, a lot of people like to talk about 20,000 transactions a second or 100,000 transactions a second. And a lot of the time, the fee model is a little bit putting aside. And I just want to highlight some of the issues there. If you think today, the two main consensus algorithms are proof of work and proof of stake or delegated proof of stake. And essentially what is a consensus algorithm mean is that the political ownership is in the hand of miners that are not necessarily aligned with the end users and applications. So miners obviously have an incentive to increase their fees, and applications running on top of Bitcoin or on top of Ethereum would like to decrease the fees so they can, scale faster and cheaper. And the same thing with proof of stake or delegated proof of stake. The political ownership is in the hand of the early adopters, such as yourself or myself and other early investors in EOS or Hashgraph and so on. So again, it puts the political ownership in the hands of a few people that are not necessarily aligned with some of the applications that want to transition hundreds of millions of users to adopt blockchain technology. Orbs is unique in that nature, that is an open federation membership that really puts the hands of the political ownership in the hands of the application layer that act as the validators. So I think that hybrid model that enables free structure and scalability and flexibility with the whole concept of virtual blockchain that is very similar to virtual machines on Amazon that everybody is accustomed to, but with the strength of proof of work that today is the most battle-tested consensus model regarding security and decentralization. I think that's a solution that no other base infrastructure that is trying to compete with Ethereum or the hybrid model of Ethereum and Orbs, I think will be able to overcome. So I'm very excited that Orbs is part of the Ethereum ecosystem, and we're working closely with some of the developers on the research, on the tech side, with Consensus, which is a huge business development arm growing the ecosystem of Ethereum, to see how we can solve a lot of the issues that they're facing today with this hybrid approach. And I think it's working because some of the largest applications, after analyzing the different solutions out there, are choosing this hybrid model. The example of Terra, I think that would be one of the fastest growing companies driving real transaction, real usage in 2019. And also some of the other announcements that we made, such as the collaboration with Kakao, which is the largest messenger in Korea, and more announcements will be made in the near future.
So as we start to see the end of 2018, it's just on the horizon, and we're starting to think about the next 12 months ahead. What's 2019 going to look like for Orbs, and or the next 12 to 18 months? Is there anything else you can share with us there?
So we are obviously very much laser focused on the launch of the mainnet that is coming soon. We're aiming to go live and distribute the tokens before the end of the year, or worst case during Q1, and a lot of the effort is into that, not just from the compliance technology perspective, but the whole ecosystem around it. Once you launch a token and, basically the free market comes available. So a lot of the focus is there. I think one of the second things that is really at the top of the agenda is getting the largest consumer applications to be part of the Orbs ecosystem. One of the things we're doing in that regard is that we're not just providing the technology solution, but Hexa is also providing a whole ecosystem that will give value to tokens building on top of Orbs, utilizing the Orbs consensus algorithm. So Hexa invested into exchanges, 5 different exchanges over the last year and a half, into market makers, into OTC, into media. So tokens that are building within our ecosystem know that they will be tradable, there will be liquidity, there will be OTC for constant funding, and media to push their innovation. So one of the top priorities is really to create a federation of some of the best and largest consumer application and real companies that are transitioning into the space, because that would really provide, I think, the vibrant ecosystem on top of Orbs. 2019 is, I think, one KPI everybody is going to be looking at is transaction throughput and actual daily active users or monthly active users. It's not just buzzwords anymore. I think there is no excuses for developing solutions that the usability is very small. It's not sustainable, and that is our main focus. And it can only happen with the constant discussion between applications and infrastructure. And if the application also become the validators in the infrastructure, as Orbs is doing, I think that puts them at the top of the value chain and really creates a very healthy ecosystem that can drive usage. One of the things that we're very proud of is that we didn't compromise on the trade-offs between security and speed and scalability. A lot of the other infrastructure, the reason they're so fast and so efficient is because they're very centralized. As I mentioned before, Stellar 21 nodes, Ripple 21 nodes. Out of them, Ripple and Stellar, the companies, they own about a third. If we look at EOS, just recently, a lot of reports regarding coordination on the feeds and the election process. If we look at a Hashgraph, they're taking a different approach of 39 and different industry actors, which I think is also very interesting. But it's really very hard to choose the best 21 validators and to keep the system completely decentralized. Orbs can actually scale to thousands of nodes, and using randomized committees of 21, we can show mathematically that we can keep the speed of other third generation infrastructure, but also be much more secure, because a randomized committee out of a much bigger base is much more secure than a smaller base of leaders, of validators. So I think there's a lot of innovation that we're driving, but the real metrics and accountability will be, as I mentioned, transactions, usability, active users, growing the federations with real companies, and I think driving real value and real adoption and maturing the ecosystem. So these are some of the things we're working on: the research, on the tech, on the business development, and obviously we are looking at the launch of the network, which I think is a very important milestone.
Absolutely. Well, a huge thank you for taking the time to come and speak with me today. But before I do let you run off, could I just ask that you remind the listeners of where they can find you guys online, and also contact a member of your team if they've got any questions about listening to our conversation today? Sure.
So orbs.com is the website, and from there you can see all the different social channels that we are active on. If it's Reddit, Orbs_network, and Twitter, Orbs_network. Obviously, we invite developers to go to the GitHub. Everything is open source from day one and very well documented. And I really think the strength of a project is the strength of the ecosystem around it. The barriers to entry on the technology side are very low because we're developing a financial system and everything is open source by nature. Somebody can go and copy the Ethereum ecosystem or Tether or Orbs, and the hours and thousands of developers and engineering, but it's much harder to copy an ecosystem. So I definitely invite developers and service providers and applications to engage with us within the different social channels. And I think the more you dive into the architecture stack, I think it would get people very excited, and collaboration within the Ethereum ecosystem, I really think gives a lot of value and the best approach to applications building today and looking to transition their ecosystem to blockchain technology. So orbs.com is the website, and through there, it's very easily to access our different social handles.
Excellent. Well, like I said a few moments ago, there is over 2,000 projects on CoinMarketCap now. And like you said, so many of them are just going to disappear and are actually just selling future dreams and not based on anything of any substance. But what is really key now, again, like you said, is we're moving away from buzzwords, and it's now about real world adoption. So I love what you're doing there in bringing big businesses, real companies into that ecosystem, because I think that is key to everything. So I applaud you for that. I wish you the best for the future. I'd love to stay in touch and see how this journey goes. But more than anything, just a big thank you for coming on and sharing your story today.
Thank you for having me. I look forward to keeping these discussions as the project develops. Thank you.
What a fantastic conversation, and so much food for thought in there. So I hope you learned as much as I did today by listening to Daniel. And although I suspect there might be a few of you listening that will think, yeah, I know a lot of this already, or you have your own strong opinions on the subject. If that sounds like you, I throw this question out to you. Is the combination of Ethereum and Orbs the optimal solution for applications with millions of users looking to adopt blockchain? Let me know. You can email me, techblogwriter@outlook.com, tweet me at Neil C. Hughes, or pop by my website, techblogwriter.co.uk/podcast, and leave me a virtual voicemail. I'm the easiest guy to get in touch with, but I'm really passionate about getting your views on this show and getting your voice heard, as well as mine and the guests. Nobody wants to listen to me rambling into a microphone for too long. So on that note, I'm going to make my excuses and get out of here. I'll return tomorrow with another guest. But more than anything, just a big thank you for listening. And until next time, don't be a stranger.
Thanks for listening to the Tech Blog Writer Podcast. Until next time, remember, technology is best when it brings people together.